Good afternoon, everyone. Thanks for joining Jeff and I today on our webcast. We're going to talk a little bit about Telus today, but before we get into that, Jeff,
Mm.
how's the snow situation downtown Toronto?
Oh, it's awful. I haven't seen it this bad ever, really,
I know.
downtown. Snow
Yeah,
never really accumulates in the downtown core, but it sure has the last couple days.
yeah, same here. I mean, it's unbelievable.
Yeah.
Unbelievable.
I looked at Canadian Tire's stock one time and passed on it because um, it was so heavily influenced by the weather, and we didn't, particularly the winter, and we didn't have one last year. So, Pat, I was just looking at it today, but now it's down for different reasons. So,
Yeah,
nevertheless,
yeah. So let's get into Telus a little
sure,
bit. Um, you and I did a webcast. Do you remember that about a year ago?
sure do.
Dial back telecommunications.
Yep.
And we ended up picking up one of them, I guess the least out of the bunch, least worse out of the bunch. And so we picked up Telus for several different reasons. And why don't you let's chat about that.
Yeah. Well, when we wrote that blog and did the webcast, we thought that it's not a good space to be in. We didn't like the corporate governance at Rogers, and we disliked the lack of growth at BCE.
Hmm.
Since we wrote that and did the webcast 1 year later, Rogers is down, including the dividend, 33%, while BCE is down about 28%. Telus is
Hmm.
down 3 or 4%. So,
Right.
um, hasn't helped or hurt us. The reason we purchased it was because we felt as interest rates dropped here in Canada, stocks with a high dividend yield would receive a multiple expansion from investors.
Hmm.
And didn't really happen with Telus. But it hasn't helped or hurt us. But I would have
Yeah.
liked to have, see a bounce back.
Well, yeah, well, one of the good things about Telus is they've been working on that project like the rest of them, converting over, I guess, the copper wiring over to fiber optics. So that's a plus.
Yeah, and they've been working on it for years. Now that that's
Mhm.
finished, all nearing completion, their
Mm.
free cash flow will go up very substantially. So here's the path forward we would like to see its management take. Um, in May, they will talk to investors about their dividend program.
Hmm.
Right now, it sounds as though they will renew their plan to increase it. And we don't think they should do that. The reason is because they already have the income investors. It's very rare to see a stock that offers a dividend yield of 7 percentage points, which continues to increase the dividend. Normally, a yield that high comes about because the stock price has fallen substantially,
Hmm.
right? A 3% dividend turns into 6% because the stock price fell in half. In the case of Telus, they have increased that dividend twice a year since 2011 at least, when they announced this return of capital program to shareholders. So you already have the dividend, or yeah, you already have the dividend and income investor. What we think they should do is use some of that extra free cash flow that they will now be generating through the completion of the fiber optic rollout
Right.
and buy back stock.
Yeah.
Because there's lots of investors who will run a stock screen saying, only show me stocks that have earnings per share growth of a certain amount. And right now
Right.
with Telus, you're not getting any earnings per share growth. You're owning this just for the yield.
Yeah, and you really look at like three different kind of investors, I guess. You're looking at the attraction of income, attraction of dividends, and some people just study or research the charts.
Yeah.
So this is actually giving them, yeah, a little boost
Well, yeah, I mean the chart's
income and
flat. Chart's
hmm
flat. So if they're buying back stock, you're reducing the float, fewer shares out in the market, and that will cause the price to go up. And so the chart looks better, and you could get a different kind of investor entering into this
right.
kind of security. The other thing they could do is sell off their cell phone towers and lease them back and use those proceeds to repurchase their shares. If they did that, they would get $2 to $3 billion, and their market cap is about 33 million. So if they take 2 to 3 billion, they buy back stock. You're looking at, they could buy 6, 7% of the shares,
Right.
and that would be very meaningful.
Right.
So,
Absolutely.
so those are two things we would like to see them discuss more, and
Hmm.
we'll know more information in May when they speak to speak to investors. We don't have to hang on to the stock. Most clients are flat on it, so we've if we see a commitment to a share buyback, that would certainly be a reason to hang on to it. Um, but if it's more of the same, we might move on to a better opportunity.
Yeah. Okay. Well, let's sit tight until May.
Until May, you got it.
Yeah. Okay. Talk to you soon.
Okay, thanks, Sonny.
Bye.